Hi, it's Mr. G, and today we're going to be talking about the trial balance. So we want to keep things in balance. So when setting up a ledger, the information from the account is usually obtained from a balance sheet. This ensures the ledger begins in balance. Total of the accounts with debit balance equals the total amount with credit balance. We learned in the last video, debits are equal to credits. Businesses' transactions are recorded in the ledger. Each transaction forms a balance accounting entry. Total debits equal total credits. And if you're not doing that, then you're going to find things are going to be wrong and you're going to have difficulties very soon. So periodically we have to check that the ledger is accurate. Okay, and so to do this, we basically make sure that everything is in balance. We take off a trial balance. And it's basically a listing of all the account balances in the ledger on the right side, or right or left side, the debit or credit side. Okay, and we'll look at what that means. A trial balance compares the total of the accounts with debit balance with the total of accounts with credit balances. If the total debits agree with the total credits, the ledger is said to be in balance. If they don't agree, it's out of balance. Okay, so your debits always have to equal your credits, which we've talked about before. So what are we doing with the trial balance? We're just verifying that this is true. In a manual accounting system, the whole process is taken off a trial balance, and it's typically done weekly, monthly, etc., because mistakes can happen, and if they do, you have to fix it because you have to have your debits equal to your credits. Now, in a computerized accounting system, you could be like, well, why do we have to check our debits are equal to credits? Because every transaction typically is like, it won't let you post it unless your debits are equal to credits. But also, it's a good place for you to just go, and I often look there for balances in my accounts. It's a quick, easy way. It brings up all your accounts, brings the balances from them. So there's still a lot of uses for trial balances. So how do we take off a trial balance? First thing is you list all the accounts and their balances and leave the room for the 3-line heading. Next, place the debit balances in debit columns, credit balances in credit columns. Add up the 2 columns and see that the 2 columns are the same. Only if the 2 columns totals are the same can you consider your ledger work to be correct. Okay. Writing a heading at the top, a heading must be showing who, what, and when. That's like with any other financial statement. So here we go back to our example that we had in previous videos. Okay, and this is a trial balance. So now, first of all, write your title, who, what, and when. Okay, who, Pacific Trucking, what, trial balance, and when. And it's looking as a specific date. Then we do put all the accounts, same order as what you would have on a balance sheet, assets followed by liabilities, followed by capital. And then you would actually put on revenue, expenses, etc. Actually, capital drawings, revenue, expenses. And so that's what you would be looking at when we learn that in later chapters. So step 3, we enter the debit and credit balances. And step 4, we just add up the total. And notice whenever we have a total, we put a single underline, put the total amount, and then the double underline. And that's all done. So it's very easy, very clear to see. When students give me correctly done work, I can quickly decipher it very quickly. If someone does some weird formatting or something different, it's confusing. It's hard to read. You're trying to look for things. You don't know where they are. Things are out of place. And so the formatting, some people are like, why bother with the formatting? You need something to be clear and concise so that you can quickly analyze it, take the information you need from it, and not spend a lot of time just trying to figure where everything is. Okay. So other formatting, obviously we have our dollar signs in these particular case, and at the first amount only, not the rest of them. So single line, double underline, etc. So that's all we really need. Now, it's important to have an account to have the ledger in balance. A trial balance is out of balance is at least that there's one error in the accounts. There can be more than one error, but you at least have one error. What do you do if it's out of balance? This is when a lot of my students, who if they're doing it manually, they get very frustrated very quickly because they know they made a mistake, but they have to find it now. And that's often the hard part. So first thing to do is check addition. A lot of people add it up wrong. Putting the item on the wrong side, even though you had it, maybe in your ledger on the debit side, you put on your trial balance on the credit side. Dollar value entry error, you didn't enter it correctly. Even if the ledger's in balance, it still can have errors. Okay, that's something to remember. Just because it's in balance doesn't mean it's perfect, everything's accurate. It means it's in balance, but you still could put things into the wrong accounts and have it balanced. A ledger is in balance may only be mechanically or mathematically correct, but you can still have incorrect balanced entries. To find errors, that we use the 4-step procedure of re-add the trial balance, check the figures from the ledger against those of the trial balance, making sure that none are missing, none are on the wrong side, and none are for the wrong amount. And so this is often just human error. Recalculate the account balances, and check that there's a balanced accounting entry in the accounts for each transaction. Okay? All right, so that is it for trial balance. I'm Mr. G. Bye for now.